Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hidayah bint Azmi, and I want to present about the impact of credit risk management on financial performance of selected commercial banks. Okay, first one we go to introductions is credit risk refer to the profitability of loans due to a borrower failure to make a payments on any type of debts. Next is a global financial crisis and the credit crunch that followed put credit risk management into the regulatory spotlight. Problem statement is about the low liquidity rate, low capital reserve of most of our financial institutions, and the subsequent weak nature of our economy, the credit crunch plague economy we are witnessing today. Okay, for the research hypothesis is first one we need to observe about the relationship between credit risk and liquidity risk, which is there is no positive relationship between liquidity risk and credit risk in deposit money banks. Next, we need to observe the relationship between credit risk and capital reserve, the relationship between credit risk and profitability in selected bank. Research question is first one is what step does Malaysian Commercial Banks Limited take in retrieving its bad loans? Next is does high interest rate in Malaysia Commercial Banks Limited reduce bad loans? Third is what types of loans are issued at Malaysia Commercial Bank Limited? Fourth, lastly is how does Malaysia Commercial Bank Limited determine when a loan has been defaulted? Okay, now we go to the research objective. Ascertains the extent to which Malaysia Commercial Banks Limited manage their credit risk, the models and practice adopted by these financial institutions to manage its credit risk and what tools and equipment at their disposal. Next is examine the types of loans issued at Malaysia Commercial Bank Limited. Next is know if high interest income in Malaysia Commercial Banks Limited can also lead to lower bad loans. And lastly is ascertains the type of committees that approve the different categories of loans in Malaysia Commercial Banks Limited. Okay, the credit risk concept has three concept, which is first one is increasingly finance facing credit risk in various financial instruments other than loans. Next is vital that they are equated compensates for the risk incurred the running of their business, and lastly has keen awareness of the needs of to identify, measure, monitor and control credit risk as well as to determine that they hold adequate capital against the risk. Next, first we go to the liquidity risk. First one is such a deposit money banks remain fascinating and intriguing through a very elusive in the process of investment analysis. Banks has traditionally provide liquidity on demand both to borrower with open lines of credit and undrawn loan commitments and to depositors in the form of checking. Lastly, is focus on liquidity risk coming from the asset side of the bank balance sheet. Next is capital reserve. Capital reserve is the minimum reserve of capital that the bank must have available. Okay, so next is adequate capital is deemed as the amount of capital that can be effectively prevent the bank failure to absorb the losses. And lastly is negative relationship occurred due to the large volume and non-performing loans will increase the bank costs and reduce the bank profitability. And lastly is inflations. Inflation is a rise in the general level of price of goods and service in economy over the period of times. Next is inflation effects on economy varies and can be simultaneously positive and negative. And lastly, economy generate agree that high rates of inflation and hyperinflations are caused by excessive growth of the money supply. And recommendation banking sector, which is first one is borrower can be performs through the use of qualitative as well as quantitative techniques. Next, qualitative models can be a Sines number with the sum of the values compared of threshold. And lastly is evaluate the relative degree of importance of the factor. Okay, so we go to the area of study. It is on risk divisions in the head office of Malaysia Commercial Banks Limited. And next is primary data will mainly be collected through conduction of interview and general observation. And lastly is the secondary data will come from published work, records of Malaysia Commercial Bank and internet. Objective of the study is to increase range of the bank clients, which is depositors and customer, and the volume of credit transactions. Next is a fresh cash monitoring policy in order to remain in business, to assess to what extent credit risk and liquidity risk influence the profitability of bank default. Okay, for the hypothesis is the higher profitability in Malaysia banks leads to lower loans losses, which is defaulted loans. Next is there is inverse relationship between interest income and defaulted loans in Malaysia Commercial Bank Limited. Okay, this is my research framework, which is credit risk. So the independent variable is liquidity risk, capital reserve, and inflation. Independent variable. So the hypothesis statement which on liquidity ratio is first one HO. Liquidity ratio has no significant relationship with return on asset of the commercial banks. H1 is a liquidity ratio has a significant relationship with return on asset of commercial banks. And a capital reserve is HO. Capital reserve has no significant relationship with return on asset of the commercial banks. Capital reserve has no significant relationship between return on asset of commercial banks. Inflation. Okay, now we go to the inflation rate. Inflation has no significant relationship with return on assets. So we go to the descriptive statistic. So it about capital reserve, inflation risk, and liquidity risk. We know about the means, then the deviations, and the number. Now we could see the correlations. Correlation is significance at the 0.01 level, which is a 2 And now we can see the R square of the model. So the adjusted R square is 0.662. And this one is a coefficient of the regression equations about the capital reserve risk, inflation risk, liquidity risk. And the dependent variable is credit risk. And this one is the histogram, which is a 2 Okay, this is a hypothesis testing. Okay, the objective is to assess the effect of capital reserve management on financial performance on commercial banks in Malaysia, which is hypothesis is capital reserve has a significance on the financial performance of commercial banks in Malaysia, which is the p-value is less than 0.05. The comments is the capital reserve has a significant effects on the financial performance of commercial banks in Malaysia. Number two is to evaluate the effect of liquidity risk management on financial performance and commercial banks in Malaysia. So the liquidity risk has significant effects on the financial performance. And lastly is to determine the effect of inflation's management on financial performance of commercial banks. And the inflation risk has an effect on the financial performance. Recommendation for future research is first one is provide the least determinants such as liquidity risk, credit reserve, capital reserve, and inflation rate, influencing the financial performance of commercial banks in Malaysia. Next is reveal a strong associations of liquidity risk, capital reserve, and inflation rate as major components of default financial risk exposed to the banking industry. And lastly is focus on the bank specific determinants. Future research would be even include in the macroeconomics determinant influence the liquidity risk, capital reserve, and inflations. That's all from me for this research. Thank you.